welcome back to another episode of Take Profit Tuesdays. And in this episode, we're going to talk about a bunch of different things. Now, for one, I do want to update us on the trade that we said we're going to be taking together. And again, let's go on the S&P. As always, give it a second, and then bam. So I just want to take a second just to see what's going on as far as technical wise before we get into the fundamentals. Excuse me, my allergies acting up. There's a lot of phlegm's building up. So yeah, as you can see from last time we spoke about 2 weeks ago, or last week I believe, when we said we're gonna get into that position, and it did get a little bit drawdown because I did get in that Sunday afternoon before the market opened, so I got into pre-market pricing, and as you can see, as for that week past, it kind of stayed kind of steady sideways. And following the week now after market close on Tuesday, it's kind of the same thing. It's kind of still sideways. I'm just gonna go in the 4-hour time frame just to get a little bit better look at it. So now I do want to emphasize a couple of things. So again, if you jumped into why I jumped in, guys, you're on a little bit of drawdown, not too much. It's probably a couple minor percentages. But I just want to emphasize a couple things. So right now it kind of broke that support zone before I had this bar, and it's kind of been retesting it. We are gonna get into some articles as to why I believe it's gonna return back to the zone, but a possibility that might happen for those who are kind of interested in shorting, or get into a short position, which is basically betting on the price dropping. This would be a perfect retest zone, and it retested multiple times, as you can see right here, right? So now let's think of it in the grand scheme of things, guys. When you're doing things in the grand scheme of things, you have to really think big picture. You have to really think long term. And just because as of right now we kind of price is going a downward trend, we could see it possibly retesting, continue to go that downward trend. It has that momentum, and orders could be filled. We are having still inflation. People might be selling off their stocks just have money on hand. Yes, those are all the possibilities. But let's think about what happened in the past during all those recessions, depressions, war, catastrophes. We've almost always we've always recovered. What am I saying? Almost always. We've always recovered. And take note that during times of distress, there are people making money and losing money. So you want to be on the side of winning the money, right? So now, during last week, and I'm gonna give you guys a little tip. I kind of saw a pattern forming, and we're gonna just call this, the head and shoulders. Again, this is something we teach at Vani. So if you guys are interested, you know the drill, right? So this is a technical pattern that may play out. I do sensing it kind of coming back to the zone, so it's kind of forming the right shoulder, right? And mind you, this is on the weekly time frame, not the daily. I always almost look at daily charts on the daily just to get a like I said, intraday, weekly perspective. Basically good entries as far as long-term positions go, because I could really get good entries as far as our prices don't dip low, it didn't fully reject, so on and so forth. So now, if you are again thinking big picture like I am thinking, you are going to what? You're going to buy, right? And you could say to yourself, "Oh, Lee, what if it continue goes down? What am I gonna do?" That's fine. You're gonna do the pillar four, psychology, right? Like we always talked about. Um, and again, if this pattern doesn't play out, which it may not play out, and that's perfectly fine. Um, you just wait till it gets lower to a cheaper price, and you get to a better price than I did. But keep in mind, guys, I do want to emphasize one thing. Just note, this is the neckline. So once price breaks this point and then retests it like it almost did right here, it most almost will always continue to go up and recover. If not, we're gonna expect some sideways motion, but nonetheless, um, yes. So I do want to go over another aspect, and we're gonna talk about the dollar index. I know it's been a while since we talked about it. I do want to emphasize a couple things, which is gonna be great for us. For my fellow citizens in the U.S. All right. So the dollar has been recovering thanks to the Fed increasing the rates, like we expected. Um, and it's good. It's as you can see. If not, you haven't been in the U.S. The gas pricing has been going lower. It's not over $5, so have you. It's slowly been maintaining it, and that's due to the dollar increasing in value. Um, I do want to go over an article. And this one is called "Why a Near-Term Recession is Unlikely." Morning brief by Emily McCormick. And I just want to emphasize this one paragraph she wrote. So it says, still, those calling for near-term recessions have drawn on a host of historically reliable indicators that have been already flashing red. As Goldman Sachs economics points out, 11 out of 14 Fed tightening cycles since World War II have followed by a recession within 2 years, and the Fed this year has already begun raising rates and signaling its intent to soon begin a quantitative tightening or rolling off assets of its 9 trillion balance sheets, which is basically the 9 trillion they did with the stimulus. They got to take that money back in. So yeah, it could it possibly a recession due to the war and so on and so forth? Yeah, but again, it's nothing to be drastically, I would say, worry about. Um, if you've been doing the right things with your life and putting money aside to save, invest, so on and so forth, it is gonna impact you, but probably not to the greatest extent as to as it was back then, thanks to technology, medicine, so on and so forth. Um, but yeah, let's keep in mind that the key points that they were saying. Emmy pointed out the Fed has begun a tightening cycle, and again, just to emphasize, they want to take the money out the market. They've been pumping money into the market via stimulus, care acts, welfare, it's all the social security. They need it's inflating pricing and goods, and because it's doing that, it's not making the U.S. dollar valuable amongst other countries. Hence why the dollar has taken the biggest dip it did since the COVID, right? So what have they been doing since? Increasing rates, making things more kind of expensive as far as borrowing goes. Because again, now, which I'll talk about now, actually, borrowing and the rates, the Fed increasing the rates. All right, so this article is going to be called "U.S. Single Family Starts Tumble. Construction Backlog at Record High." So this one kind of also emphasizes the the fact that, again, how the Feds are going to be increasing the rates just to reduce this inflation occurring, and once they reduce that inflation, again, they're able to increase the value of the dollar itself, the strength of the dollar, so the dollar has more value. Because again, guys, you have to think about it. Even though we're a nation and we have our own currency, we do compete against other countries as far as GDP or gross domestic products. So we have to have a strong country, a strong value system, We're not just spewing out money just so everyone could just buy and sell, and there has to be order. So that's where a lot of the value comes from, the dollar. So now, so go to this paragraph. And again, if you're watching on Instagram Live, go on the YouTube channel Vonnie FX to see the chart and what we're exactly talking about. The 30-year fixed mortgage rate has risen to 5% for the first time in over a decade as the Federal Reserve hikes borrowing costs to quill sky-high inflation. The housing market is the sector of the economy. I'm sorry, guys. I'm so tired from work. Economy most sensitive to interest rates. And why is that, guys? Why is the housing market sector is most sensitive to interest rates? Because you're borrowing larger sums of money. You're doing the biggest purchase you could ever make as a worker in the United States is your house, your primary residence. If you're paying a down payment and you need to mortgage that, finance that housing, that's the most you ever borrow aside from student loans. So again, with the rate attached to that borrowing, it's gonna be going up. Before it was extremely low actually during COVID. They actually dropped the rates so money could go back and forth. But now the rates are even more higher than before now. So not everyone's gonna be able to borrow at rates at 5%. So now it continues. A lack of existing inventories should be positive for building activity. However, high input costs and shortages of both labor and materials remain headwinds for builders. Rising mortgage rates that cripple demand will also be consideration for building activity going forward. So even the cost of prices and goods and cost of materials are going up. From down to the materials building, from to the laborers, down to financing the house itself. Everything is going up. Everything. So just keep that in mind. For those who are out there, planning to buy a house. Might not be the best time to buy right now, especially how the market's, doing. Single family housing starts, which about for the biggest share of home building, dropped 1.7% to a season adjusted annual rate of 1.2 million units in March. Single housing building plummeted in the Northeast. It also fell in the West and densely populated South, but rose in the Midwest. So you kind of have an idea where the markets kind of swing left and right, right? Starts for housing projects with 5 units or more jumped 7.5%, or that amount was the highest since 2020. So even though, again, I'll tell you what, the ones who are really taking advantage of these scenarios are the builders, the home builders. That's where you kind of see a lot of construction going on. People are moving, so they're going to take advantage of that. So again, those who are able to move back and forth, they're able to afford those interest rates and, take on that cost. Which also bring down, inflation itself. So, I do want to go to another point. I know I've been talking for a while now. I want to go over the value with basically, I want to see what the commitment of traders are doing. I want to see what traders are putting their money into as far as commercial, retail, and institutional. And it's going to be euro. So as far as short positions, people are still shorting euro. As far as retail, more than they're doing long. Right, which is very eye-opening, because we saw before, we talked about last week that the dollar was rising, so euros has to be shorting. Even the institutional traders are shorting. So long term, guys, I would say if you're trading forex, continue to short. I'm probably gonna get to a short position soon, send it to the team, and then we're just gonna continue to make money. I want to talk about crypto today, but I didn't want to give you guys too much game as far as free content. Again, guys, we're gonna have our masterclass May 13th. I've shown in past videos. If you guys want to get involved, it's our masterclass. 30 minutes info, 30 minutes Q&A. Yeah, lifetime of passive income, lifetime of knowledge. You could earn at your own pace and learn at your own rate. And again, we have all the services that we offer. If you guys are interested, let us know. But I do want to make some final thoughts on this video. As far as the position we're all playing together, right? Is that it's gonna continue to go up. It's gonna recover. And if it does get back to this point, I might buy more at a cheaper rate. So I'm not too worried. I'm very confident at the point I got. I didn't buy it at this high, and I didn't buy it this high. So in my eyes, I'm doing great. If you guys didn't get in, you can get in now. You get in at a cheaper rate than me. And we'll see where we are next week. Other than that, guys, I'll see you at the top. Peace.